Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and financial mumbo-jumbo to tell you what's really going on with your favorite public companies. Today we're looking at ECD Automotive Design Inc. And let me tell you, this latest report is a real page turner, or should I say a real scroll turner, because it looks like they might be in a bit of a pickle. So what's the big news? ECD Automotive Design Inc. has just filed a Form 8K with the Securities and Exchange Commission. Think of an 8K as a current report. The company is telling us about something important that happened that investors need to know about right away. And what happened is definitely important. It's about whether they'll stay listed on the Nasdaq stock market. Normally, when we delve into these filings, we're looking at revenue numbers, profit margins, and all that good stuff. But today, the story is a bit different. It's about compliance with Nasdaq's listing rules. For a company to trade on a major exchange like Nasdaq, they have to meet certain standards. These are in place to ensure that the companies are stable enough and have enough investor interest to be traded publicly in a fair and orderly way. Now, ECD Automotive Design Inc. has been having a rough time with one of these rules. That rule is about the market value of their listed securities. Basically, Nasdaq wants to see at least $35 million worth of the company's stock and other securities being traded. The company hasn't met this minimum for a while, and back in February they were warned about it. They were given 18 days, which is about 6 months, to get their act together and bring that market value back up. That deadline was August 25th, the day before this report was filed. Well, it looks like they didn't make it. On August 26th, which is the very next day after their deadline, Nasdaq sent them another notice. This one is pretty stark. It says the company has not regained compliance with the rule. And here's the kicker. This means there's now another reason for Nasdaq to kick them off the exchange. It's like they were already on thin ice for one issue, and now they've added another. And what's that other reason? It's about the price of their stock itself. Nasdaq has a rule that the stock price needs to stay above $1. If it dips below $1 for 30 days in a row, that's another red flag. The report mentions that this was the subject of an earlier delisting notice, and it seems like they haven't fixed this problem either. So not only is their overall market value too low, but the stock price itself has been in penny stock territory for too long. But here's where it gets interesting. The company isn't just rolling over. They've got a hearing scheduled with the Nasdaq hearings panel. This is their chance to argue their case. They're planning to fight this. They want to convince the panel that they should be allowed to stay on Nasdaq. They're going to try and explain why these numbers are what they are and what they're doing to fix it. Now we have to consider what happens. If they lose this hearing, the consequences aren't pretty. Trading of their common stock and warrants on Nasdaq will be suspended. This means Nasdaq would officially file a form to delist them. After that, if they want to continue trading publicly, they'll likely have to move to an over-the-counter or OTC market. OTC markets are generally less regulated, and the stocks there tend to be more volatile and less liquid. Think of it as a step down in prestige and accessibility for investors. It's not the end of the road for trading, but it's definitely a downgrade. Before we move on to the very limited financial details, I want to point out this section here. Being asked if this filing is to satisfy some other reporting obligations. They've checked off that they are an emerging growth company. This means they qualify for certain regulatory flexibilities. For instance, they can delay adopting new accounting standards. That's kind of like getting an extension on homework, but for companies, this designation can be helpful for smaller companies, allowing them to focus resources on growth rather than immediate and potentially costly compliance with every new accounting rule. While it provides benefits, it also means that investors might not be getting the most up-to-date financial reporting methods as quickly as they would from a more established company. Let's look at what's actually trading on Nasdaq. We see here that their common stock trades under the symbol ECDA and their warrants under ECDAW. Both are listed on the Nasdaq Stock Market LLC. This is the exchange they are fighting to stay on. Now, the sad part for us as viewers is that this 8K filing is primarily about regulatory compliance and potential delisting. It doesn't actually contain any detailed financial tables or performance numbers for the period. This is a current report designed to inform us about specific events, not a quarterly earnings report. So we can't really dive into revenue growth or profit margins here. The only thing we get on the exhibit side is a mention of an interactive data file formatted in something called inline XBRL. This is basically a way for companies to tag their financial data so it's easier for computers and analysts to read and process. It's a step towards making financial information more accessible, but in this specific report, the actual financial data itself that would be tagged is not presented here. So what's the takeaway here? ECD Automotive Design Inc. is in a precarious position. They are at risk of being delisted from Nasdaq because they haven't met the minimum market value or the minimum stock price rules. They have a hearing coming up in September to try and keep their listing. If they fail, they'll likely move to the OTC markets, which is a much less visible and potentially more volatile trading environment. My take on this is that the company is clearly struggling to maintain investor confidence, at least at the level that Nasdaq requires. The fact that they've failed to meet the minimum stock price and market value thresholds suggests underlying issues. It could be a lack of investor interest, poor financial performance that's not detailed here, or a combination of factors. The upcoming hearing is their last chance salvo on Nasdaq. Investors should be watching that very closely. If they do get delisted, it's a significant event that could impact the stock price and liquidity dramatically. Without more financial data in this filing, it's hard to say exactly why they are in this situation, but the warning signs are clear in this filing. It's hard to say exactly why they are in this situation, but the warning signs are clear in this filing. It's hard to say exactly why they are in this situation, but the warning signs are clear. Alright, that's our breakdown of ECD Automotive Design Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.